The market dives, then recovers on Friday. Are the bulls fighting back? This is Invest with Jacob. Okay, guys, so in last week's video, I told you that there was important support down at 43.50, and we should see them come down to that area and bounce, and that's exactly what we saw. The market moved down into the 43.50 zone and then bounced for the rest of the day to close basically flat. Now the question is, can the bulls follow through? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can see our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the video, last week you saw the testimonials of people having a great time making money and learning the market. As you can see on the screen, we had an incredibly good trade last week, trading an Elliott Wave setup that works very often, and it played out perfectly, netting us a nice big win there. So if you want to be part of this winning team, stay tuned for later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the weekly futures chart for the S&P 500, and on Mondays I do like to start with a big picture look. So that's what we're seeing here today. Remember, we talked about this back in October. I filmed a video right before this bottom that said we should be bottoming in here and heading to 4,300, which we did. And admittedly, the market blew through that up to 4,600, a little higher than we anticipated. However, if you were watching my videos, I maintained two things the entire way up. Number one, as long as they held support, pressure was up, and it was. And two, no matter what happens in this move up, there will be a buying opportunity even in the bullish count because they need to come back to test the pivot in the 4,400 to 4,300 area, and that's exactly where we're at. This is what I preach in our rooms, which is extreme patience and no emotion. Once we see this market move up for several weeks in a row, we get conditioned to think it's never going to stop and we're going to go to 5,500 directly. And that's just not the case. The market doesn't move in straight lines, and it is not rational. So the up move became irrational. It went past many fibs, and that's okay. That happens. But we did know that it was going to come back to test the pivot to give us a buying opportunity if that was what presented itself. However, that's not exactly where we're at now. But I did tell you we would be back in this area if you missed the move up and not to worry about it. And here we are. Overall, in the big picture, we were counting this as an A, B, C up. We're still counting it as that. They just barely got through the 1.0 extension of A and B. Okay. And that is a typical C wave target. Had this been a wave 3 of 3, which it still can be, or a wave 3, we would expect at least 48.02 out of this move up and then a back test of the pivot from there. But they were unable to push through 4,600 too far and then came back into the pivot. So now we are looking for the next bounce. This area right here, as you can see, the blue line is the 21-week moving average. That's a very strong support area. Came down and hit it on Friday and bounced up off of it. Now, the bounce was not exceptional. It was kind of a weak bounce, and that's very bad news for the bulls overall. You would expect them to hit that and accelerate up out of there, but they do have time to spike through it and then kind of do that deal where they come down and test 42.98, which is the lower end of support for the bulls. Below that becomes very problematic. So if they come down and they hold and then you see some acceleration to the upside, we could still see new all-time highs up to where the next fib would hit about 4,900, pull back one more time, and then up towards 55.08 overall. That would be the bullish count, and that is the alternative count. The actual primary count is still this ABC that I talked about. And what we're looking at as we dig in to this ABC, this completed a bigger B wave. So we had A down, which we talked about before this bottom in October. In October, I told you we should be here and then up here and then down here. We're starting this move down. The bears need to follow through, and when we dig into the hourly chart, we'll see exactly what that means. But right now, they are forming a wave 1 down that we would expect to challenge this 4,300 area. And then we'd look for a wave 2 up bounce from there, and then a big, strong move down that would eventually come down and break the October lows. So as of right now, it's still a little bit too early, but the bears are doing their job. They have given us a strong 5-wave move down, followed by a corrective bounce, followed by another start to a 5-wave move down. But they need to complete that full 5 waves to give us the wave 1 down in that 4,300 area to give us a more solid look that we are going to get the bigger move down in C toward the 2,900 to 3,100 area. Again, if the bulls can hold the pivot, which is 42.98, and give us an impulsive move to the upside, we would be looking at 4,800 next and then 5,500 after that. So let's dig into the 1 hour chart on the futures. Okay, so as I talked about in the big picture, the weekly chart, they did give us a solid 5 waves down, which you can see I have the circle wave 1 here and then the wave 2 up. Okay, and then they gave us a nice 1, 2, 3 so far to the downside. They hit the 1, 2, 3, 6, which is exactly where you would expect them to hit. And then you would expect them to bounce, which they did. And we'd be looking for them to hold 44.25. They can push it as high as 44.47. That still holds the top of the pivot, but you'd really want to see them hold 44.25 to have a more normal standard structure. But again, they can push a little bit higher than that. But over 44.47 is problematic for the bears. They want to keep it below that and then push down again to complete wave 3 to the 42.93 area. As I said, this would be a challenge of support for the bulls. We would likely see a bounce here. And assuming that they get to here, okay, and remember this is the 618, the bottom of the pivot for the bulls. Assuming they get to here, the bounce here will be extremely important. If it is an A, B, C, and we start down again, then I will have much more confidence that the C wave down is playing out, and we will be looking at a big move down over the rest of the year after a wave 2 bounce that takes us back up. So a lot of important times coming up for both the bears and the bulls. The first time is right now. The bears held, they now need, or the bulls held, but the bears hit their target. Now the bears need to hold 44.25 to 47 on any bounce and then move down towards this 42.90 area. If they can do that, bounce one more time and hold again and make one more low, then it becomes much, much more likely we're in that bigger C wave down. If the bulls can push up over 44.47 at any time before we complete these 5 waves, then the bulls are back in control and it's much more likely we're headed higher. Now, there is an alternative to that, and the alternative is that we get an A, B, C up. So this was A down, B up, and then you'd get C down. Okay, and they could still hold here and then come up in a bullish count. But the 2 main paths that we're tracking, the 2 that really matter are this pivot, 44.25 to 47, and the move down to 42.93 and bounce from there. So those are what we're tracking on the ES. It's pretty straightforward. I'll go over it again real quick just in case that was confusing because of all the different things there. The bulls need to push back over 44.47 before the bears complete their 5 waves down. Okay, the bears are looking to bounce up and hold below 44.47, make this wave 4 and wave 5 to complete bigger wave 3, bigger wave 4, wave 5. If the bears can do this without the bulls breaking back over 44.47, then it's much more likely we're heading down in the bigger C wave. If, however, the bears can break back over 44.47 before we complete this pattern right here, then it's much more likely the bulls are in control, and depending on the pattern, we will be headed back toward all-time highs in the next couple months. So that's what we're tracking on ES. Over on the NASDAQ, okay, the NASDAQ, same type of deal. We talked about October, the bottom coming in, and then looking for that ABC up, which we got. I drew this blue target box a long time before they got here. It's down here somewhere, that they could come up as high as this 16,000 area. They touched just above it and then started down. And so the NASDAQ, we would look to be in the move down to test the pivot as well. They have also given us a potential start to a bigger 5-wave move, and we'll dig into that in the hourly chart. But overall, we're looking for the NASDAQ to break down below 14,039 to signify that the move up is done and the bears are taking control, and we're looking for this C wave down toward the 9,700 to 8,200 area and a much bigger correction off of the top. So that's going to be really dependent, again, on holding the bigger pivot, which is 14,520 to 14,039 for the bulls. If the bulls can hold that and give us an impulsive move to the upside, we'll likely see all-time highs in the next move, pull back, and then up toward 19,000 or so after that, maybe 18,500, 19,000 for new all-time highs on the NASDAQ. So as we dig into the hourly chart here, we'll see exactly how this plays out. So on the hourly chart, the NASDAQ has given us a potential for 5 waves down here, and we'd be looking for an ABC bounce in wave 2 back to the upside. However, given the overall length of this wave 5, that it moved down well past the 2.0, the 14,747 target we had, it does look more like this is going to turn into an extension of 3. And the way we figure that out is wave 5 really shouldn't be longer than the 618 of waves 1 through 4. So you take your extension tool, you start at the top, and you go all the way down to the bottom of wave 3, and then to the top of where you think wave 4 is, and you come down to the 618, and they moved through that, and the 764 is kind of the line in the sand. 618 is really what you want to see. You really don't see many wave 5s that get past the 618. And when they start coming down, the 764 is kind of the line in the sand. They didn't quite get to the line in the sand, but they're close. And if they continue to the downside and break 15,564, then I would have to move this 3 down, and this 4 over to wherever they bounce, and then 5 down from there. And that kind of lines up better with ES anyway. So it would definitely look more like we're getting an extended wave 3 down instead of the wave 5 ending right here. So it's going to depend on NASDAQ holding the low and getting a substantial bounce up toward this blue box here, and what kind of bounce that is. If it's a impulsive bounce, which it does not look like it is so far off of the low, it looks corrective so far. That can change, but generally when you start off corrective, you stay corrective. If they can get back up into this blue box in a corrective fashion, we would look for the next move down. Otherwise, we would look for an impulsive move where we get 5 waves up, and then a pullback, and then the breakout over all-time highs there. So NASDAQ, very similar to ES. It's starting to align itself better. It wasn't originally aligned the way it looked, but now that they're extending to the downside in NASDAQ, it does look like it's extending in a 3, which is what ES is doing as well. It's in its wave 3. So if they can get on the same page, it does line up better for the bears and does look like more downside is going to play out. Now, again, that pivot that we talked about, that 14.5 to 14.039 area, needs to hold for the bulls. Anything below that starts to become problematic because the pivot is broken, and unless they're going to take it higher in a diagonal, we would expect to see that C wave lower play out. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial, because I want you to get in there, make sure you love it, and become part of the trading team before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course. You can see on the screen all of the testimonials about it. It is helping people understand how the market works, how to understand the market instead of trying to decipher the news, and how to actually make money trading the market instead of being confused all the time when the market goes against what you think. It is 25 videos that I break down into 3 sections. The first is your introduction, where we go over Elliott Wave expectations, emotion, KISS method, and why Elliott Wave works. We also go through your chart setup and tools, where I go through every tool that I use along with Elliott Wave Theory to give us more supporting evidence that what we think is playing out is actually playing out. And then we do the Elliott Wave for Beginners course, where I go through each of the waves as well as their standard corrections, as it is a beginner's path that will help you understand the market. The really cool thing about this course, guys, is it is included in both rooms. So if you want to become a monthly member, you get the Elliott Wave for Beginners course automatically. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading, as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures his trades is so unique. It's something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where you put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, key takeaways for today. We're looking for the rest of this pattern to play out. The bears need to hold it really under 44.25, but 44.47 is kind of the breaking point. Then we would expect down from there toward the 42.93 area, which is big time support for the bulls. Then back up one more time, and then down in 5 towards 42.34 to complete wave 1 down. If they can do that, that gives us a very strong indication that we are heading down in the bigger C wave, and we'll see a much bigger decline over the next 6 to 10 months. However, if the bulls can push back over the pivot on the bear side, which is 44.25 to 44.47, if they can push through 44.47, then the bulls take back control of the market, and we would look for the start of move to all-time highs. Over on the NASDAQ, same type of deal. If they continue to push down here, we would call this an extension in wave 3, as wave 5 is getting a little too long in the tooth here. If they cannot push down, we would look for an ABC back up toward this blue box, which is at 15,341 to 15,723, and then another move down from there. We're basically looking at the same type of setup on the NASDAQ, where the bears need to break 14,500 to 14,039 to kind of break the pivot of the bulls, and the bulls are looking to break back up over this 15,723 area. Guys, that's the market update for today. I'll talk to you tomorrow.